Numbers videos. I'm Tracy Reinick, and I'm bringing you all the most important of the charts. And in this video, we're going to focus on the consumer. What is he or she doing? Are they pulling back or are they continuing to spend? There's a lot of consumer-focused stocks reporting this week, including some retailers. They all don't report at the end of earnings season. So I wanted to bring you what is happening with those charts. Are some of these stocks deals after the big sell-off this year? Let's dive right in and see. So the first stock out of the gate is Chipotle, one of the most important of the restaurant stocks, ticker CMG. We all go there, right? I call it the king of the restaurant stocks, although it was dethroned by Domino's Pizza the last couple of years, especially during the pandemic, as everybody was ordering Domino's in for delivery. But Domino's has hit a snag now, can't find delivery drivers. That's a key part of their business. So Chipotle's regained the title here. And as you can see, it's got a great earnings surprise track record, just the 3 misses in the last 5 years. And that includes the pandemic years. So that's impressive. It has beat 5 quarters in a row now. So it's put together this nice little streak. But the shares have pulled off, as many of these big growthy names that were expensive on a PE basis have weakened here. But how weak is it? Chipotle is still trading with a forward PE of 43. So it's not exactly cheap, even though year to date shares are down about 23%. It has bounced off these lows in this mini rally we're seeing here in July of 2022. Is this the worst of it? Are shares gonna, reverse here and head back to those highs? We don't know, but this is one you want to be watching for both what's happening with growth stocks, but also what is happening with that consumer. Then we're going to switch over to Etsy, another huge pandemic winner here, also with a great earnings surprise track record. If you haven't followed Etsy, you might be surprised by this. Only the 2 misses in the last 5 years. And then it had those huge beats during the pandemic as we were all buying masks on their site, plus whatever else, because we couldn't go shopping out in the stores. And then shares peaked and have now down big, down 55% year to date. But even with those 8 earnings beats in a row. So I know you're asking, hey, maybe this is a deal now. It's almost, looks to be round tripping back to those 2020 lows, but it has bounced off the recent low here and is up 23% in the last month as people have dove back into these growth stocks, just like with Chipotle. But Etsy, also expensive, trading at 47 times. So the earnings are pulling back and not going in the right direction, but people still want to be in this stock. As I said, it's up over 20% off of those lows that we just saw this summer. Was this a fake out rally? We don't know, but we're certainly going to find out soon. And then we're going to switch over to Sherwin-Williams, ticker SHW. Now you might be surprised, Tracy, why is this on a video about the consumer? And that's because obviously paint. They are huge in home painting. This too took off and soared during the pandemic. We're all stuck inside. We all got sick of the color of our walls and even our outside of our houses. And so we were painting up a storm, but that has cooled off now. And Sherwin-Williams is facing a little bit less demand, but higher costs, both in the materials that it uses as well as in labor. So Sherwin-Williams pulled back now, down 26% year to date. But it too is off of those lows. As you can see, that sharp little rally here over the summer, up 15%. Off that low there. Is this the worst for Sherwin-Williams? I don't know. We're going to find out maybe on this earnings report as well. But its PE 27 isn't exactly cheap either. So even the old stalwarts that's been around, for decades here is not cheap. It does pay a dividend, but with that kind of expensive PE, it's only yielding a 0.9% yield. So that's not even that great for most investors. So Sherwin-Williams kind of key on the home side of things. What is happening with paint sales now here in the summer? We're going to find out. Then I'm switching back to the restaurants. So Wingstop, one of my favorites during the pandemic. I know I ordered it. You probably did too. They were offering free delivery there at the beginning of the pandemic. That was a deal. But once they made me start paying for the delivery, I did pull back. Has everybody else pulled back too? I don't know. Then you also have the issue of the actual prices of the wings. What is happening there? How are their costs holding up? They also have delivery driver issues and just labor issues in general. They have put together 3 misses in a row. That's a little surprising because they did have a good track record of the meet or the beat, even throughout the pandemic. So now things are getting a little rocky on the beat category, and shares now down 39% year to date. But like these other stocks I've been talking about, the growth investors have gone back in here in the summer, and they're up about 30% off those lows. So if you're actually trading this stock, you've made a nice little return here. Shares are not cheap. This is also following the theme of all of these stocks, trading at 68 times still because those earnings have weakened here on the inflationary pressures. So what's going to be the result here? Are we back to trading at 100 times earnings with some of these growth names? Just going to throw caution to the wind? Or was that a fake out bottom there? We will see as the weeks go on, but this earnings report is kind of key. Then we're going to wrap it up with, dare I say it, one of the few growth stocks that also looks like it might be a value here. Deckers are outdoor, ticker DECK. No, it's not about decks. It is Uggs. And now Hoka 11. Those popular footwear brands that have soared throughout the pandemic and continue to be popular. And I've often said, footwear companies do well in recessions because it's usually not a super high priced item, and it is a way to update your wardrobe fairly cheaply and easily. So people tend to keep buying shoes even in recessions. So Deckers looking well positioned here, even in an economic slowdown. But you can see these shares are also off their highs. Year to date, down about 20%, but it too is getting a little boost off of those lows here in the summer, up 12% off those lows. Now, it has a great earnings surprise track record with just that one miss in 2021 to maim its otherwise greatness here. But we can overlook that because it was still beating throughout the recession or throughout the pandemic. Throughout the pandemic, it was still beating. And that's impressive given everything going on with the supply chain, managing to get the supplies of the shoes to both its retail stores, online, and to its wholesale suppliers. It is in the department stores, for instance, and places like that, many of which were shut down during the pandemic. So this is an impressive story. I've always liked it. It is trading at just 16 times. And if I could get it a little cheaper, I would be happy. So what's going to happen with a stock like this? A growthy name that is looking more affordable. We will see on this earnings report, but I'm still expecting big things, especially from Hoka 11, its other brand that is seeing a just surgence in popularity right now. So maybe the consumer isn't pulling back, at least not yet, as much as everybody thinks. But we're going to see this week. We're also getting a lot of home builder type of stocks, home builders plus other home industries, including Sherwin-Williams, but some flooring and some cabinets. So we'll see. Are the consumers still spending on the home? Is it all about the experiences? Are we all going to the IMAX to see the movie and traveling instead? We will see this week. Be sure to subscribe so you get all of our Earnings All-Stars videos. I'm bringing them to you every week. And even when this busy week is over, there's still thousands more companies to report. So I'll be bringing you the videos for numerous more weeks as we go along here. And it's going to get interesting, especially as we move into those retail stocks, which are usually at the end of earnings season. So you're going to want to stick around. Get all of our videos at zacks.com/YouTube. Get all the earnings charts from me on Twitter, just under my name, Tracy Reinick, or on StockTwits. And I'll see you again next time with some more charts.